Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So although in the gold market actually we have the same driving factors in the forex market, reaction, as you can see, absolutely different. So if you know forex market, we have the significant collapse, and as well in the stock market. The gold market shows the good resistance to this negative news and stands relatively tight. Actually, we are pleased that gold was able to stay above the predefined 1830 support. We think that this level is necessary to keep purity of the bullish context. So to keep it as pure as possible, as gold preferably should stay above this area. So there are a few moments exist that we think might be supportive to the gold market in the coming week and in general in short-term perspective. So first of all, if you'll take a look at the sentiment of the market, we do not see this time changes on the net futures positions, but we see the big breakout, the positive breakout in the reserves of the SPDR fund. So finally, although long-term SPDR fund reserves were drifting lower, this week finally you see the big upward increase. So this is upward action on the reserves, which confirms that divergence between the SPDR fund reserves and the price mostly should be treated as a bullish. This is the first moment. Second, and this week you could see that's really very big collapse and drop in the net dollar bullish positions. If last week it was about the 20 trillions, this week it has become just 12 trillions. So this big drop since the mid 2020. So this is definitely also should provide some support to the gold market. But in general, reassessment of the Fed policy, that overpricing of the dollar, this is good moment, and that's definitely also is positive sign for the gold in the short term. But we think that in the nearest few weeks and maybe even longer, the geopolitics will become the factor that will move the gold market. It's just because the events that we see currently in the confrontation between the United States and Russia is probably these events never stops lightly and finished lightly and fast. So the problem is that, well, actually not even the problem, but it's just the overall situation comes to the stage where Russia can't switch the back pedal. So if it was said, and it was that Russia's demand to move the North Atlantic Union back to the borders of the 1997, they just can't ignore these words, and it just can't deny it. So some steps should follow. It's just because if nothing will happen, it just will become the really big hurt to the reputation of the country. And I suppose that the Putin can't do this. So it means for us, well, I do not know what will happen. I'm not an expert in geopolitics, but the one thing that it's clearly be seen here is that this is for a more or less long term. And ending geopolitical tensions usually stands in favor of the gold market. It could put other markets in chaos, but for the gold, it's just really golden time. So that's our view currently. Besides the Lavrov and Blinken will meet again on the next week, so it also could bring some surprises. So anyway, we treat currently the overall sentiment of the market as a positive, and we think that the chances of the gold to proceed higher stands greater than any sharp reversal. Meantime, and we even have the patterns actually in the weekly chart. If you remember, how multiple grabbers that suggest taking out of the 1875 top. So market should take it out of this top actually, based on the patterns that we have. But in the shorter term, the one thing that we need to control is, of course, the 1830 area. This is important because if we'll take a look at the 4-hour time frame chart, you could see that our journey with the hand and shoulder is not over yet, as market hasn't quite reached its target, and its target stands around 1850. And if occasionally market will just drop below 1830, that will become the reversal below the neckline of the pattern that hasn't quite reached the target yet. Besides, you could see that overall action to the 1840, it was really sharp and strong here. You can see some acceleration. I would say some kind of the three white soldiers has been formed, because you can see that next candle is greater than the previous one. All candles are closing at the top, and that reminds me well-known Japanese stick pattern, the three white soldiers, in opposite to the three black crowns, right? So usually this impulse should get the continuation, and the fact that market accurately stands above the 1830, showing just minor retracement, this is very good sign. So currently we do not see any reasons why we should exclude from the observation, exclude from the consideration the chance to take the position against these lows, so putting some stops below this area, just because in the short term, indeed, the 1830 is invalidation point. So you can see on the hourly chart, the target that we have specified based on the minor hand and shoulders has been completed. Market has completed this OP, starting up production, retested this area with mostly equal bottoms. It's a very good sign. As the bottoms stands very close to each other, most of them could say this equal. This is natural support resistance line as well, and 1830 support, and turning up again. This is good sign, guys, and it seems that, well, chances really significant that we could get upward continuation. Besides, let's take a look. It is too steep MACD downside price action here, so that downside angle compares to what we have on the chart, and makes me think that some bullish pressure exists here. It's not quite clear and typical, as we usually prefer to treat the bullish dynamic pressure, bearish dynamic pressure, but definitely here exists some bullishness on this relation of the price to shape of the MACD. That makes me think that upward action really has good chance to happen. So on upside targets and the nearest ones, we will keep an eye on, of course, on the OP, which is 1852. It's minimum target of the hand and shoulders, actually, hasn't quite reached. And then next target will be, as we already talked about, is this OP or this larger ABCD pattern. It's also butterfly 1618 extension. It's 1862 approximately. So that's what we intend to keep an eye on at the beginning of the week.